whether we like it or not, there is never going to be a replacement for personal injury, particularly with some of the county court judgments we're seeing. They can be a bit hit and miss. What Ignite is seeking to do is back good law firms with good quality cases with proper alignment of risk.
One of the questions I know that you underwriters used to ask on 80 is the barrister on a CFA?
Yeah.
You know, he's writing you this brilliant advice, over 60% prospect success, but is he on a CFA?
Yeah.
You know, because one of the things, my understanding that you used to look at is a barrister gets paid come hell or high water. There's no, his interests aren't aligned with the AT insurer, with the solicitor. Where this happened in the past, and you were able to allow cases where the prospects were good, prospects changed, everyone walked away. There obviously may have been a claim on that policy because obviously everything to do with the delegated authority was formed. How are you viewing the kind of new areas where everybody isn't on a CFA in this instance?
Yeah, no, I take your point completely. So I think you've got to bear in mind that 20 years ago, injury lawyers and consumer lawyers were forced to work on conditional fee agreements, no-win, no-fee agreements. They had no choice in the matter. That's what the government insisted. The commercial sector of lawyers, and I include both law firms and barristers in this, have never been forced to utilise no-win, no-fee agreements. So they have only come to a table on those, arguably begrudgingly, but also far later than the injury litigation sector. So whilst we have seen some hybrid CFAs, partial CFAs, so 50% of the fees are private, 50% are on no-win, no-fee, there's never been a force upon these parties to do so. So it then creates this interesting dynamic where the law firms are used to working no-win, no-fee and will do so, but the barristers won't. So the point we've reached is to offer a percentage of their fees to be insured and a percentage not. Right. Because you can't, it's not for us to stipulate to these barristers that they must work 100% no-win, no-fee, because quite frankly, they'll just go back to their commercial work and do it. But that is what's the interesting dynamic of these new areas, is that they're effectively requiring the services of commercial litigators in volume work. And historically, we've never seen those two worlds merge, whereas now we are.
Yeah, I suppose the thing, just focusing on the barristers, I know that's not our main focus, is that as you said previously, you're going to get people trained by barristers. Barristers are kind of the key, not only for yourself, but also for solicitors when assessing if this is something we're going to run. And it just amazes me that actually they have shifted now, as you say, maybe because they don't need the work, to say, I want this money come hell or high water. But actually, if the prospects of a case change and I tell you that, then all these cases are now no longer got any value.
It's a constant worry for a lot of stakeholders in litigation, but particularly litigation insurers, that if people are being paid privately, are they going to assess the merits of the case in the same fashion as they would if they were only going to get paid if they win? And it's a constant battle for us. So again, one such solution is this hybrid CFA arrangement where they'll get paid a bit as they go along, or guaranteed a certain amount of their income if they lose, and then they will have the rest of it contingent. But it doesn't resolve the issue completely. So I don't think there's ever going to be a solution to that, because again, commercial practitioners, commercial barristers can always go back to that sector and get paid privately. How do we encourage them to get into mass volume claims and work contingently? From a purely selfish perspective, you wouldn't do it if you were that entity. So that's why we're trying to, as Ignite, reach this middle ground where we will offer up a certain percentage of the barrister's fees to be insured, just to give them that degree of comfort.
And how, as an AT underwriter, do you deal with the risks of the judiciary changing their view of something? So where I'm going with this is if kind of 4 or 5 years ago, the big hot topic was the holiday illness claims. Now, holiday illness claims, I worked in a law firm in 2003 that were running holiday illness claims along with 5 other law firms in the country very successfully. The defendants knew the particular solicitors are running these cases, and they were always treated properly. Obviously, things changed in and around the time of the RTA changes. We had 10 times more holiday illness claims all of a sudden going through, and the judiciary basically took a view that there's something not right here. And whether these were previously good claim types, they no longer became particularly strong claim types because of the stigma around those types of claims. how do you look to protect yourself? And is there anything you can do? And are there any areas at the moment where you're of concern about the same?
Yeah, so this is really interesting as a because it's something that's at our forefront of our mind constantly. I mean, whenever we get involved in any sector, whether it be the mis-selling of consumer contracts or the mis-selling of business energy contracts or anything which is new and deemed to be a bit hot amongst lawyers, we will look at every part of the value chain. So we will make sure that we talk to the barristers, we will make sure we talk to the marketing companies, we'll make sure we talk to the lawyers and anyone else really. And that process doesn't stop once we've incepted a new scheme. It's forever ongoing, where we will continue to engage with stakeholders, keep an eye on published decisions in the sector, speak if we do get a negative decision, go and take stock of that with our own counsel, or alternatively with lawyers in the sector, just to see if this is where the market is going or whether it was just a blip. Because ultimately what we're finding with particularly with some of the county court judgments we're seeing, they can be a bit hit and miss, and they're not always correct. Without being discourteous to the judiciary, some of these decisions are just fundamentally wrong and need to be appealed. So it's a constant monitoring and due diligence process, whereby we will keep an eye on what is going on in the sector, what reported decisions are coming out. I mean, ultimately, I think it's for litigation funders and litigation insurers to act as gatekeepers to stop the rubbish. And whilst we can't speak for competitors, what Ignite is seeking to do is back good law firms with good quality cases with proper alignment of risk. But we can't guarantee what other litigation insurers or whatever litigation funders will do with another law firm. And we have seen with some areas of law, it's been going incredibly well, but it's taken one bad egg, as it were, to run a bad case, and it get ruined for everybody. So there's only so much you can do, but I think ongoing due diligence, constant monitoring, and maintaining standards for our own law firm clients is just key to success, really.
And what's your kind of recourse when you are monitoring these schemes? So is it actually we're seeing more failures in this area, so we're going to have to change the premiums that we're charging, or is it actually we're now no longer taking on any new cases in this space, or actually can you go as far as saying all those cases that you have on cover, we're no longer covering this area because we just think the prospects have changed? Is that
there isn't one short answer to that, save as to say that with county court judgments, they're obviously not binding on the higher court. So ultimately, if we were to get a high court decision or an appellate court decision which changed the risk profile of a given area, we would have to look at not underwriting any future work in that area. At county court level, those decisions aren't binding. As we've alluded to just slightly earlier in the conversation, there is the prospect that it's just one bad decision, or the client's had a bad time at the stand, etc. So certainly at county court level, one bad decision is not going to make us change our mind on backing those cases. If you get to a point where you are continuing to lose them, we then have to take stock of it and maybe stop writing that business till we're happy that the portfolio is going to succeed. But so much due diligence goes into the front end of these cases that as part of our underwriting considerations, we look at the prospect of there being an adverse decision within the next 18 to 24 months. And I think in areas we support, we'd hope that that wouldn't happen. So again, if you take a look at these principal and agency claims where there's undisclosed commissions, we now have Court of Appeal authority, which isn't going to be changed on the subject. If you look at Plevin, for instance, there was a Supreme Court decision recently which affirmed that the limitation period on these claims is longer than it was previously. So ultimately, we're looking at areas where you are having, in the first instance, higher court decisions which aren't going to be overturned. But if that situation was to happen where cases were starting to lose or were having to be discontinued, we'd have to take stock of it and see if the area could be supported overall.
Good. And so in terms of kind of long term, there is, from your side, a future for new schemes. You are open to writing new schemes. You're seeing that there is, enough successful cases on many of these schemes to warrant you to continue to write, and you see the volume ATE space continuing.
We do, but I personally think we're still in something of a hangover from the RTA days in terms of law firms' mindset. Whether we like it or not, there is never going to be a replacement for personal injury for law firms offering services to consumers. There isn't going to be one area where they can concentrate all of the resource into and where they can run a profitable business. So our view is that there is the ability to continue operating in this sector and still be profitable, but you are going to need to keep into consideration the timeline on these cases. If you're going to be able to succeed in them, can you then enforce? Are you going to be able to hire sufficiently qualified staff to run some of these technical arguments rather than people you may have employed for road traffic claims who didn't need to be as technically astute? So it definitely continues to work. And from our perspective as Ignite, we are going to continue to support the areas, but they've got to be done the right way.
I mean, we didn't touch on it before, but it's interesting you just mentioned that. It chased something in my mind. Is that that presumably is quite a big consideration, because you often see, yes, you have a claim, yes, you are going to be successful, but actually, are you going to get any money? Now, in the days where with the RTAs you're bringing a claim against an insurer, the chances are, you're going to get all three. You're going to get the recoverability as well. But I suppose now, with differing, potentially unregulated businesses that you're actually bringing these volume claims against, presumably that's quite a big consideration.
Yeah, it is. It's top of the list. For us, it certainly is. But again, for the sector, I'm not sure that it's always been thought through by some of the law firms, and that is without being disrespectful to them, but obviously historically they've never had that issue because you've always had an AXA or someone on the other side of the motor policy, right? So there are areas we've seen there was a huge demand of property-related insulation claims in the last 2-3 years, which on paper were deemed to be very strong cases, but there wasn't a target. And ultimately those cases as a whole failed because there wasn't a target. Now, had those cases been supported by a loan which would have given recourse through the Consumer Credit Act to the banks, that whole area could have completely changed. But without a target, it's all pointless, frankly. So yeah, for us, one of the key considerations is, are we going to get paid? Unfortunately, with a lot of these new areas, they are financial services claims. They are against large corporate entities or banks, and that isn't a problem. But with some of the instances, we have had to decline to be involved because there just simply isn't a money man at the end of it.
Okay. So message to any lawyers with a potential new volume area that they want to consider and want to consider ATE on?
I think the headline from our perspective is that you need a top-down review of your business. You need to review the timeline of how long these cases are going to take, the cash flow burden of such cases. Are your staff suitably qualified to be running a complicated principal and agency argument when they've historically been dealing with rear-end shunts? Do you want to rely on outside financing and the restrictions that might place on your business in terms of them being all over you? But ultimately, done correctly, they can still work and you can still be profitable.